Hello, hello, guys. How we doing tonight? Mm, mm. Hopefully all is well. Can you guys hear me? Someone give me a quick confirmation here. Mm. Awesome. Awesome. All right. Oh, let's get right into it. How about that, right? These days, I don't know about you guys, but hopefully you get to the same point where trading just gets boring. It's the same thing over and over again. And that's a good thing because the outcome is great, making money. But the thing with that is, as a beginning trader, you teach yourself not to be results oriented, right? Boring is the goal, actually. Yeah, exactly, right? But you teach yourself to not be results oriented. So even though you're making money, it's just the same thing over and over again. So just gets a little special, right? Gets a little boring. But we had the same thing as yesterday, so we'll look at it. But of course, after starting to form a swing point at this low, what would have been the best bias today, right? And also important to note, took out previous day low, failed to close beneath it pretty much, right? We closed above that level. What does that mean? Bias is previous day high. So for me, bias was really just about trading back into this fair value gap. And past this, I'm expecting price to return to that. Let's bring it back here to that other new week opening gap. So this is my target for the semi short term, but we have to take into consideration with NFP, we could easily look for a Thursday or Friday reversal to continue lower. We'll have to see once we get there, but to have some intraday objectives, you could have split this up into quarters. We reached into the first quarter, didn't reach for half though. As per ES, we did reach the midpoint, barely, or did we not? Well, see, I thought we did, but we did not. So same thing on ES actually, where we just reached the first quarter and did not reach the midpoint. But before going higher, we had a huge retracement lower, which gave us some great opportunities. And this is what we'll go look at now. 15-minute chart. Let's go in replay mode so we don't have to see what is happening at the moment, right? This line here is previous day high. I'll remove it. Oh, that's not what I want removed. There we go. Okay, right now it's pissing me off. Why is it highlighting the correct thing, but when I delete, it's deleting the wrong thing? I'm pissed. Sometimes trading view, sometimes. Did you guys see their April Fool's thing? They got me. Launching a perfume. Nice one. Nice one. But looking purely at price, right? What did we see? Well, same thing as yesterday. And let's bring in our daily open and let's just do a vertical line here. No, actually, you know what? Let's do both. A little bit slow tonight. But what did we see? We opened, we had a huge gap during Asia. And don't ask me why. I have no clue. Perhaps there was some sort of news. No clue what happened, to be honest with you guys. Truth is, I don't really care, right? I always tell you, and during London, not during Asia. But from that point on, what else did we have? Well, both sides of London are taken out pre-New York Open, right? Which is this 930 line. Let's actually bring in a vertical line as well to help showcase it, right? So both sides of London are met, which, by the way, there is an option on this indicator to remove the levels once they are swept. But just when we're reviewing charts, I like to have these lines. Asia high has been taken out at 930. Asia low has not been taken out. So what would be a good bias? Well, we took out previous day high already. We took out London high. We have retraced into this bearish PD array. And even though I'm bullish and expecting the day to have a deeper retracement higher, well, I can still look for short-term shorts until previous day low. Not previous day low, sorry, current day low, which in this case would have been Asia low. And see, you would have had a nice manipulation at the open to go down to this level, followed by a move higher. We also had news. I always forget. I need to take note of those before we start. It was PMI. Because whenever it's not an important news, I all have the same rules for them, right? You might have seen that on my when I shared my news frameworks on Twitter. And if you're unfamiliar with that, it's all available under the resources channel in this Discord. But PMI, and we have JOLTS, job openings, nothing too interesting, nothing too special, right? It's just some average news where we'll wait until after the news and then look to engage with price. And when is after the news? 10 a.m. So let's actually mark it out. Right at 10 a.m., we manipulated lower, took out Asia low, and then expanded higher. And this is what we'll go ahead and see. This is not what I wanted. We'll go ahead and see on our 1 minute chart. And you guys will see setup was, I mean, it was exactly like yesterday, right? 10 a.m. news, what do we see? Time-based manipulation, we go lower. Do we have SMT at this point in time? I'm not gonna lie, I didn't see any SMT. There might have been. Let's actually go back and look. No, well, not on the 15-minute. Perhaps if I go down to the 5-minute here, I'll go check it out. But I won't go into the 1 minute and look at very old swing points, right? So no SMT really. And I mean, if I go down to the 1 minute, maybe I'll find a little swing point here that will offer divergence, but nothing of interest. Before that move lower, there was SMT, right? With Asia low being already taken pre-market on ES. But that is of no interest to me because I'm waiting at 10 a.m. to take a trade. And at 10 a.m. we have news, so anticipate manipulation. Once we have that manipulation lower, so by the way, guys, just to be clear, from this point on, and let me remove the new week opening gap, I like to use it intraday along with the midline and quarters here and just see how we interact with these levels throughout the day. It was a big day that could have offered a lot of scalps, but it's not something that I'll use intraday when I'm looking for an expansion trade like I would today. So from this point on, right, I'm going to go in replay mode. You guys say you like this, right? So at 10 a.m., I see manipulation lower, right? One candle. I don't need more. Okay, from this point on, I have my confirmed framework. I can go long if I want to. Of course, it's better to go long after a key point of interest has been taken off. But is my long here bad? Not at all, right? We have taken out London lows. We've taken out some key objectives. We can now expand higher. There was also some 1 minute SMT here, I believe. So this was not taken. Was it this one? This swing right here. No, taken on both. I thought I saw some 1 minute SMT. So I guess it was right here, actually. I really thought there was some earlier SMT near the open. Oh, well, now it's staring at me in my face. So right here, right, that we went lower. So here, I'll mark it out. See, this is why I should actually keep my charts annotated initially, so that instead of lasting 40 minutes because I spend 5 minutes looking for things every time, you guys tell me, right? Do you prefer once we go about it all together like this, or would you like me to have my charts pre-annotated and just more so like a presentation? You guys let me know. Pre-do it? Yeah, it would be more efficient, right? Just have them pre-annotated. But definitely let me know that. And the people watching this on YouTube as well. As is works for me. We'll run a little poll in Discord this weekend. Why not? But from this SMT, of course, I could trust some longs. So from this point on, I'm already looking for longs right after that news. I did not need anything more, but price wanted to keep going lower. Is my long still valid here? Yes, it still is. I'm just waiting for a bullish breaker. Do you guys see a bullish breaker formed after 10 a.m.? I don't see one. So I'm still waiting. I'm still waiting, still waiting. No bullish breaker yet. Still same thing, even though this SMT is gone. From this point, I was a little less confident in longs because after we take out this objective, I feel like we should go higher. If not, I have a lower objective. But now we have a clear lower objective, which is Asia low. So now I need to wait for Asia low to be taken out. In my mind, what I'm thinking is, oh, look, I could have shorted right here. Sorry, guys. You know, you could have looked for a short off of this breaker block right after the news, but it just doesn't make sense to me. Because when we have news, right, like we have at 10 a.m. right here, let me actually remove those 4-hour opens. Chart's getting kind of crowded. But when we have news right at 10 a.m. like this, or no matter the time actually, I need a manipulation. And right here, manipulation says lower. So I can't look for a short here, only after retracement. And after that retracement higher, well, the entry was already too late, and I'm not looking to short this right here. This is just not my model. So nothing much here, just waiting, waiting, waiting. But as soon as we take out, now I just skipped through it. So let's actually go back. As soon as we take out Asia low, now my ID is valid. I always like to see those in advance, right? Like I see that this is forming, and that from this, if we break above this line right here, then this will be a breaker block, right? It is not yet a breaker block, so to make that clear, let's just remove the text, right? But as soon as we trade above it, it will be, right? So right here, is that a breaker block? No. Sometimes I anticipate them, we close above, it is good enough, but I actually haven't done that in a while because it's adding in extra trades where there is no need for them. And on the next bar right after, we formed the breaker block. Now from that point on, what do I need for a trade? Well, overlapping fair value gap or inversion fair value gap. So as soon as this bar closes, I have a fair value gap below. Right? I don't need to look further than this. I don't have an inversion fair value gap above this. And on the next candle over, we actually retraced into it. It's a little hard to spot with hindsight, right? But as soon as that candle opened, we went straight down into it. 3PD array stop loss rule, well, there's only two. There's that fair value gap, the order block, and this is the invalidation of the breaker. But there is no bullish candle in the range of the breaker. Now you might say this because you're looking at swing high to swing low. And of course this candle is after, right? Which is a little weird. But what I'm looking at when I'm looking at this is actually, where is it? Because there was SMT here. Okay, but in this case, it doesn't really help. But here, is this lower? Actually, let's look at the values. Low is 19288.5, and the low of this is 288.75. Actually, this morning, what I was looking at is this, and I was looking at this candle specifically. And since this candle engulfs it, it is just simpler to me. But this is actually lower. So all of that range, and what do I say when you don't have an up close candle? Just use a full candle. What I like to do is go down to the 30-second, and then I see the full range. And see, now it's a lot easier to spot. It's from this swing low to this swing high. Oh no, because once again, it is not. But here I have a 30-second range. And I could bring my breaker as to here. All right, so purely mechanically, I could tell you, my bot saw this whole range. Because the thing is, when there's no up close candle, I will just use the full range. That's the easiest way to go about it. You don't need anything else. Now, if you guys are interested in the actual mechanics behind it, I just know that this range formed extremely quick, so I need to be on a lower resolution, lower time frame to be able to see it. So that's what I like to do. But if not, you can make it very simple by just using the full candle, which in this case would be the full range. How big does a wick have to be for you to consider to put your stop loss at the 0.5 of it? Yeah, I did talk about this once, right? About how this is going to be a resistance block, kind of. I mean, it's to the left. But when candles have a big wick like this, that I don't mind using CE and placing my stop of it. And it's not really a question of the wick, Alex. It's more so a question of, is my stop loss too big? Yes. So now I need to find a way to shorten it. This has a big wick. Then I can look for this. So instead of waiting for a better entry, for example, I can place a slightly tighter stop. But in this case, it's not really what I would call a huge wick. This is pretty standard. I mean, always look at percentage of the candle, and in this case, it's pretty much, it's near 50%, right? Yeah, it's almost 50% of the candle. So you could consider that a big wick, definitely, and place your stop at the midpoint of it. But for me, it's just I place my stop where it should be, 3PD arrays. Then I see 51.75. With current market volatility, this is not too big. And if we look, my first objective that makes sense is this with the confluence of the 4 standard deviations, which is the current high, right? And you know what? Let's bring this guy in. Opening range, 30 minutes. First 30 minutes of trading, this is the clear objective. Right? When we have 10 a.m. news, I really like to use that 9:30 to 10 a.m. range quite a bit. And you know what? Let's bring this guy in. Should keep it on my chart. I feel like I'm always showing it to you guys. but I'm going to bring the range deviations in here. Let's actually look at some deviations. See, it's already set up. First 30 minutes of trading, and see we hit that 0.5 beautifully before reversing higher. The high of that range is definitely a key objective for me, 100%. All right, so that's a key objective. Does that make sense? The massive wicks are on purpose to scare us off with huge stop loss. Fair enough. But see, in this case, it's not really a question of is my stop loss too big points wise. It's proportionally. If my objective is there and my stop would be too big, then it just wouldn't offer enough risk to reward for me to take that trade. But in this case, it does. And even to my partial here, which for me was just daily open, swing point, liquidity. But even then, I'm not going to lie to you guys, I did not take profit here. Because for me, it is very clear. I have the statistics on the opening range, how often we should go reach this level, especially with the added confluence of we hit 0.5. And it's another one of those 70+% frameworks. So why would I look for anything else? That's what's difficult about the rise model for me, is the statistical take profit with a break or stop loss. What do you mean by this? Statistical take profit with a break or stop loss. The mechanics are easy, but experience needed are hard. Experience needed, do you mean for the take profit? You can hold trades all day. Oh, so that's what's hard. You know what I tell my students when they start off? It's very, very simple. I tell them your partial is your full target. That's it. So for example, in this case, this would be your partial, and we're looking 5-minute premium. Very clear partial, offers enough risk to reward, liquidity, reversal range. I mean, you have like 5 confluences along with the daily open there, all right? So very good partial objective here. Okay, well, that's your trade. That's it, fully closed, nothing else. You're either fully right and it heads to your partial and you close all your trade, or you're fully wrong. That's what I tell them. Why? Because that's much easier than telling them you can take profit multiple places. And it also teaches them not to be mad because the moves keeps going. You'll see your trade reach that final objective and go far beyond that final objective. But that teaches you. So it's a psychological trick at the same time. And of course, that's extremely hard to do. And the main reason why that's extremely hard to do is really not a question of the trading specifically or hard to notice or anything or mechanically. It's hard psychologically because you have to let go of money you were already in. Like, for example, I'm in this position, like I am already feeling entitled to this high. If we reach there, I sure hope I'm still in this trade. But here I'm forcing you to get out here. That is a great, great thing to do. And I mean, for us, you can always do more. That's the truth, right? Sometimes with my models, I have extremely great months, and sometimes I have what I call the bare minimum. And the bare minimum is my bot. So mechanically speaking, do I beat my bot? This is how I do my personal review of the month, by the way, is does my own insight and change to the model? Like, for example, sometimes there are some setups I miss. Sometimes there are some setups that I don't trade. Sometimes there are some setups where I go half risk. You know, all these changes. Well, does it make it better or not? And that's where experience comes in. But you don't need experience. Trading the model mechanically will be profitable. Now, it's just a question of how profitable are you going to be, right? Are you going to be up 5R at the end of the month? Or are you going to be up 50R? It's a lot of different things, but definitely doing something like this is profitable because just think about it, right? If my average risk to reward is, let's say let's make an easy rule. Always look for 2R, right? If I always look for 2R, do I win more than 50% of my trades? Well, I don't know if you guys remember, but every single day that we do these PA reviews, we look at every single setup. And the win rate hasn't been, I mean, I don't remember the last time we had a negative win rate, which a win rate below 50% in a day. I actually don't remember. which means if you trade mechanically, you're going to have no issue, even if your target is just 2R. But my goal is to squeeze the most out of that trade I can. So for me, it's a question of partial, which, as I said, in this case, for me, statistically speaking, I just held on through. So my partial was a bit higher. And that's what statistics do for me. They give me confidence that I don't pull out of my ass. Mechanically means following the rules purely, which means that if I have one of my frameworks, my intraday frameworks, for example, or a statistical drawn liquidity. So now, I think it's going to go there. No, like there is 70% chance it goes there. Oh, my bias is previous day high, and I have the statistics based on the mechanical bias, right? So that's what I mean by mechanically. All the way down to your lower time frame charts, which you're looking for a manipulation, time-based. What do I mean by time-based? It means at a news or at a session open, I'm looking for a manipulation. During macros as well is pretty good, which will form a breaker block, and I'm taking a unicorn entry. Partial is at the first inefficiency, in the case of longs, first inefficiency in premium. Second partial is at the external of the range, always open to leave a runner. But you don't have to leave that runner. I always like to, though. This whole model is mechanical. It's not like what the people on Twitter are saying when your average furu is telling you, oh, this is a mechanical model. No, my model is entirely mechanical. I bring my own experience and my own discretion into it so that it has better results. Because I am now able, after studying thousands upon thousands of these setups specifically, right? I am a specialist within unicorn setups and within the indices futures markets. So I know that in certain market conditions, my model doesn't perform well. The win rate goes down. So perhaps if I'm trading it myself, I'll decide not to look for a trade today since price is consolidating a lot. And I prefer to not trade than to take a loss. Mechanically means that you have a system, a rule-based approach. If this is there, then this. If this is there, then this. If this is there, then I can take the trade. Stop loss is established mechanically. Take profits are established mechanically. Awesome. But yes, just to get back into it, opening range high, clear objective for me. Why is the name not there? I like seeing the name here. So let's call this OR. Let's do this. I like OR. So opening range high here, along with the 4 standard deviations, beautiful objective. Then it's that fair value gap, higher time frame fair value gap, right? But we already traded back into it. So am I really going to use this as an objective? No. In this case, what I could use are deviations of the opening range, which I like quite a bit. Sorry, I need to remind myself to mute my phone. Sorry, it's my mother. Okay, we're good. This can wait. But deviations of the opening range are great. Also, overall, current high of day. You guys see me notice that all the time. It is a big liquidity level. But more importantly, what I'm going to be focused on here is going to be SMT against me, right? So, for example, with important levels, important to point out here. Let's remove all the other ones. I don't want you guys in here for now. Let's bring this guy over here. I like to have some sort of drawing to help myself be anchored in some way. But see, for example, here the opening range high got hit at the same time. I have no issue against that. And then we look at the current daily high, which on ES, this is previous day high, which was actually not even met yet. So this would have been a great target for ES. But also right here, which is current daily high. Was it hit at the same time? And of course, plus or minus 1 or 2 minutes, we need to confirm the swing point to form SMT anyways. There was no SMT against you in this case. I always like to look for it, as I said, because if I have, for example, if NASDAQ takes out that level, but ES doesn't, I'm going to give it a few minutes to catch up. But if it doesn't, I'm going to either trail my stop very aggressively, or I'm going to just entirely close my trade, right? And these are the specifics, actually, Doomer. I don't know if you just didn't know the meaning of mechanical or just in relation to the RISE model, but trade management is something very discretionary. I have some specific rules for it that I'm not going to go in depth right now. pretty complex once you get to it because they're actually all coded, right? But the easiest way to go about it, and I'm always selling simplicity because I really believe that that's the best way to go about it, right? You're in trading to get money and to save time. So why the hell are you trying to be super complicated and get every single penny out of the markets that you can? All right, all right. Well, mechanically, technically, we're talking about mechanics like an engine, gears, a car. So it must be weird for a non-English native speaker hearing that out of context. Is this you? Yes, this is me indeed. The key times and opening prices indicator. Uh, I have a few more, as you can see, and this indicator is actually the update to the one you just sent in chat. Thank you, brother. I'm glad you appreciate it. It got taken down, I think, 3 times before we finally got it up, but definitely a good one. But nice little upgrade and update coming to it. In here, you know what? Why not? We're not a lot in here. I can give you guys a little sneak peek right here. Infinite custom levels. It's pretty cool. Why can't they make time levels before the time? What do you mean by that? Why can't they make time levels before the time? Been using it for a while now. Never knew many mentorships recommended it. Really? That's awesome. That is awesome to hear. It's a very simple indicator, right? Very simple one. Line shows at, say, 10:45, not before. Vertical ones. Oh, yeah. Yeah, that's something you can do. But then it's a question of like, okay, for us, do I want to showcase that line at the beginning of the day? Do I want to showcase that line at the beginning of the session? So it's like you just have to decide, right? But yes, that's something that can actually be done. Actually, yeah, why not make that an option, right? That vertical lines will show up before. I mean, you can have a simple little checkbox that says showcase vertical lines at start of day, for example. Yeah, okay. I'm doing that. I'm definitely doing that for us. Thank you. Your macro times show up and it's like boom. Yeah, definitely. You use vertical lines for all macro times? That must have been long. Send me a DM after this for us, right? Or right now, so I don't forget. Just shoot me a DM and you'll see. I'll tell you about it. All right. But right back at price, right? Got carried away there for a second. So, current daily high, which is that first line on ES as well. Then ES also reached previous day high. You know what? I'll leave this level. Then ES reached previous day high. And from that point on, I mean, there isn't much to target. You could target the midpoint of that fair value gap. For me, that's just bullshit. Truth is, at this point on, I'm just trailing my stop, or I'm holding until the end of the day, which in this case would have worked out pretty much as if you trailed your stop. Where trailing my stop, I always tell you guys how I manage it. Here we broke the high of this range, which means that now my stop will be at this low. This is the next low. So I would have gotten stopped out right here, which is pretty much the same as if I just held for previous day high. But 0.5 standard deviations, 1 standard deviations. We did not hit 1.5 until today, actually. Today's open. But some pretty nice PA. We're going to talk about some more setups, but definitely for the long setups, this was the first one that presented and it was successful. If you were looking for shorts, well, as we said, no setup were previously present, right? And then right here, you took out that, why is Asia gone? Because I'm no longer in replay mode. Let's go here. Right here, you already took out Asia. So if you're going to be waiting for something, I'd at least wait for the current daily high to be met. But it's also easier to say, well, you don't even need to understand this. Just wait for a bearish breaker. No bearish breaker, no bearish breaker, right up until here. I see a loss. Let's point it out, right? Why not? So this is your first bearish breaker. I see a unicorn entry here. No need to even look at SMT. Let's just be pessimistic as we always are. Let's just say I was targeting midnight open. Who cares really? It's a loss. All right. You got stopped out right here. Doesn't matter why. Doesn't matter when. Is it just me or NAS 100 or on the broker chart is not working on TradingView? It might not be. I'd be glad to look at it at the end. I just don't want to mess up the whole formatting for now. But I'd be glad to look at it at the end. Also, at this point, you're also in the bearish fair value gap, higher time frame fair value gap. So I think that looking for a short is still valid at this point on. Oh, wait. Entry is after 11:30. Fuck yeah. So this is actually not a valid trade. Haha. No losses there. Someone asked, by the way, in futures, in case you guys are wondering. Yes, my time window is from 9:30 to 11:30. I've explained this in past peer reviews quite a bit. I don't even look for trades past then because I have so little successful setups that appear there. It's not a question of win rate. It's a question of occurrence. It's like if I take every setup after 11:30, I'm going to be profitable. But it's going to be so much wasted time. That last 30 minutes of the AM session that rarely gives me a successful setup. Just not worth it. So from that point on, you need to wait until the PM session, at least if you're following my model. No lunch trade opportunity here. I just see lunch as expansion. So what am I going to look for the PM session to do? If lunch expands, I'm going to look for continuation. Now, if it's going lower, where is it going? 15-minute chart. This is our intraday time frame. And by the way, if this is all confusing for you guys, Rise model video on my YouTube, that is definitely where you want to go. All right, model explained in depth. It started to get like a lot of information here. One standard deviation of the OR as well. I mean, so many confluences. And my retracement objective will be the first discount in efficiency. Right? Nothing new. I go over this stuff like super quickly because it's stuff we cover every single day and it is the same thing. So if you're new here, don't be scared to ask question. I really don't mind repeating myself, but I won't go in depth if no one asks me a question. Yeah, repetition is good, right? Definitely to make sure it sinks in your mind, right? But this would be my partial objective for sure, right? It's the first, not my partial objective, my full objective. This move lower, I am framing as a retracement. And if you weren't framing this and your daily bias was bearish, then very simply, this would just be your partial. For me, that was a full objective. I actually did not trade this short. I was one and done, sorry, right after. Let's look at 11:32. And I've actually liked, and here's a great opportunity to, no, I actually don't want to showcase this yet. So let's draw it manually. When's the last time you guys saw me draw an opening price manually? Right? It's been a while, so why not? So this is the PM session opening price, right? 130. And I like using that level when I'm trading continuations, not for any specific reasons other than it helps me visualize power of three, right? Just a candle formation. So I'm looking for my candle to form. Where's my brush? Brush is no longer there. Let's bring this guy back. So I'm looking for my candle to form like this and go up and form, for example, it opens right here. So go up and form a high, then expand to a low and close somewhere right here, right? Then I am very not shaky in this sense. But this is what I'm looking for, right? So from this point on, my best opportunities will be above that opening price. So it's good for me to frame it sort of as a premium and discount level. And if we look at the first bearish breaker to form, it is this little guy right here, unless we had SMT. As I said, I wasn't looking at this, so I'm really just analyzing this alongside you guys. I mean, there is SMT here. Doesn't form a breaker, but it is beautiful confluence for your trade idea. Let me remove those green lines that we have. And remember these quarters that you guys see on both assets, this is your higher time frame fair value gap. So really just a very nice setup in this case, and it does not seem like it gave you an entry. Let's look at this. Yeah, so that has not broken this. As you guys can see here, we did not go and form the breaker on this candle, then basically gave you an entry and just ran without you. That sucks. Was there an inversion fair value gap to the left? I don't see one. Wow, that is really unfortunate. Nothing really to add in this case. It just sucks. I'm looking for a way to perhaps find something different. Like, I mean, I see a breaker block, but this is not one that you guys will like. And I don't even think it gave you an entry. It did not, right? And I'm going to show it to you guys since it did not give an entry. We don't care. But this is swing high to swing low. And then your next candle will open here, went to break the high, and then went lower. So this is what I mean when I say focus on the symmetry, right? This is pretty hard to spot, and this is a bearish breaker. But the possible entry at that fair value gap, I mean, it's getting far there. It's getting far there. I'd much rather just wait for that breaker to form and take the entry. But this is a breaker block. Perfect lab model entry. Really? Where's the inversion? Oh, maybe on a different chart, right? 3 minute or something. No, I mean, that's a good entry. It's just, it's before the breaker block. So it's not a question of noticing it or not. It's really just a question of, it's not my model. So even though it's a successful trade that you could have predicted, I don't want to use the word easily, right? But could be predicted simply. I mean, it's just a synonym at this point. It's just not a setup, right? And yeah, we can look for long opportunities after your retracement objective has been met. But it's very hard for me to look at that. You know what? Let's just look at it. I was one and done. I really believe that is the best way to go about the markets. It really simplifies, honestly, life in general, because you have so much more time. But if you're not, you're looking for a bullish breaker to form after this level has been met. I see this guy. There's probably a shit ton of SMT, right? I see consolidation. So, of course, I anticipate SMT, all of this, right? But this is your first bullish breaker. And from that point on, you're looking for a fair value gap or an inversion fair value gap entry. This is your first. Yeah. So a tiny little guy here. It's kind of hard to notice them with hindsight when you're looking at it through consolidation. But I mean, if you're looking at it here, it's like, okay, well, we consolidated for a little bit and now we have an entry. Always include the volume imbalance. You guys know me. And if we go like this, you have your entry. And even if you only saw that, this is still a fair value gap, right? So there's nothing much to add in this case rather than, okay, well, place a limit here and you're waiting for that entry that just got there a second after. 3 array stop loss rule, fair value gap, order block, ouch. You guys know why I say ouch? Because with hindsight, you can see that this stop loss would have stopped you out. So if you had your stop all the way down there, then it would not have. But moreover, we had SMT at this low. So I would have actually trailed my stop at this low and then got stopped out here. It's just rough. Consolidation will stop you out. And what's funny is you probably have a perfect entry right after. You know, I didn't even notice what we did at the end of the PM session. Pretty sure we went back up. I wasn't in a trade anymore. 3 array stop loss rule will place your stop here. Actually, no. This is inversion fair value gap, fair value gap, fair value gap. And your entry would actually be based on that inversion fair value gap. Wow. I mean, that's pretty straightforward. And if we get out of replay mode, let's just go look. And I will go back in replay mode because I don't want to see what happened today. That would have worked out beautifully. So even though you would have had a loss here, and let's actually, you know what, let's try and do some transparent thumbnails, right? Because I always use the day's price action to do the thumbnails in case you guys didn't notice. But let's also show the losses. So long, short, just did not give you an entry. You know what? We also had a short loss right there. Let's mark it out. Was right here. We just explained it, right? This would have stopped you out. So once again, another day. 2 losing trades, 2 winning trades. Both winning trades being long, sure. But see, I could have had 2 winning trades and 2 losing trades, or I could have just had 1 winning trade. I would have lost out on 1 point something R probably, maybe 2. But I still made, well, I didn't make 3.84 because I took profit here first. But I think realize was 2.9 today R, which is great. Great. Let's actually talk about objectives here, right? Where's that breaker block? So I highlighted the same breaker block here, but let's actually use the most recent one from this point, right? And let's use the standard deviations from this. As you guys know, I always like to use the large standard deviations as well. So I have a big range that still formed a breaker block. And see, it almost always aligns with the 4 of the short-term range is going to be the reversal range at the other. Honestly, just looking at this, that opening price would be a great partial. But let's go about it once again mechanically, right? So we'll look at our range that we're looking to reverse. And was this lower or was this lower? This one. And we're going to see premium and discount, 5-minute chart. What is my first premium and efficiency? What the fuck? So it's that opening price, which is just a tiny bit lower than the PM session open because this is a bearish order block. And 2 to 2.5 for standard deviations. Beautiful confluence. See, that's the thing. With standard deviations like this, I might want to look for the midpoint of that order block. But let's keep things simple, and especially when we're looking at charts with hindsight, right? I always say it, but let's be pessimistic. And here, let's be precise. 2.37 R. What is the correlation between the dollar amount of the manipulation, the how far price will go statistically? Correlation, are you looking for a number? Because the truth is, it does not matter at all. I literally have the data behind it, and it is not a good way to, it is not correlated to the markets at all. But you got to think about it in a specific way for us. If I'm very volatile today, right? I'm going to go down a lot, but I'm also going to go up a lot. If I am to go up, if I am to go down, of course. So it's just proportional. So it really doesn't matter what you do. I use standard deviations as a way to bring confluence to my targets. I know that my target that aligns with this is higher probability than if my target didn't align with this. A $20, I'll just switch it to points because dollars will confuse people that don't trade something based on dollars. But a 20-point manipulation is a, oh, what do you mean? Oh, it's a $40 move. Just curious why. What do you mean? A $20 manipulation is a $40 move. I don't get what you're saying. Deviations. $20 manipulation is a $40 move. I still don't get it. With the deviations. Send me a chart. I don't know. I think it was Alex yesterday, right? Send me a chart. Tell me what you mean. 0, 1 is 1 to 2. Oh, okay. That's like because -1 is 1 deviation. But if not, you have 0, 1, and then your 1 deviation, your 1 deviation here is 2. But if you use minus, this is -1 for 1 deviation. So this size is the same size as this size. Yeah. But I don't get correlation between the dollar amount of the manipulation, how far price will go statistically. I don't know. I guess I didn't understand the meaning of the looking for the statistics in this case specifically. But anyways here, sorry. Partial and then final objective, always external of that range, which will be current high of day. We did not reach it. What is my rule? 6. I always say 6 because I just see it. I see 16 and then I say 6. But 4 p.m. candle, I always like to use the open of that candle. This is where I close my trade. So 5R total and actually close perfectly at 4 standard deviations. That's wonderful. Wonderful. So definitely some very high probability opportunities today that led to some very beautiful PA, Right, what did we do? We opened, we had some fuckery going on, a little back and forth, right? Until when? Until the news. News manipulated lower. We had our first leg expansion, retracement to our target, and then continuation that failed to complete until, if we go out of replay mode, today. Pretty straightforward stuff there. Do we have any questions in relation to that? Pretty long review tonight. Yeah, we lost a few along the way. Last 6 of you guys are still here. Awesome. What's up, Emil? Great job. Thanks. Appreciate it. Always, always, always. All right. On that note, guys, I wish you all the best, and we'll see each other once again tomorrow night. You guys have a good one, all right? Good luck trading tomorrow. Bye, guys.